morning. I'm Ellen McSherry, Chief Operating Officer of the NJCPA. Welcome to IssuesWatch with Ralph Thomas. Ralph, who is seated to my far left, is the CEO and Executive Director of the NJCPA. Ralph's guest for today's show is Walter Brasch, who is seated to my immediate left. Walter is Partner and Chief Business Development Officer at PKF O'Connor Davies and is the 2016-17 President of the NJCPA. If you have any questions at any point during the hour, we invite you to submit them via the Questions tab or tweet them to us at #IssuesWatch so that we may address them throughout the broadcast. So for today's agenda, we will cover state tax updates, including the Transportation Trust Fund Tax Relief Bill and other state tax issues. We'll also spend a little bit of time on the federal tax updates, talking about due date changes, President-elect Trump's tax plan, and tax fraud. And certainly we're going to cover some things that we see going on in the legislative and the regulatory outlook. We'll talk about the DOL overtime rule, federal single audit study, CPE standards, and upcoming NJ legislation. Okay, so Ralph, before we get started, I think we want to talk a little bit about the TTF tax bill, and we have a short video, I believe.
Yes.
So let's go to the videotape.
The Garden State is one of only 2 states that has an estate tax and an inheritance tax, and it has the lowest exclusion threshold for the estate tax at $675,000. The agreement calls for a 2-step phase-out of the estate tax. Starting January 1, 2017, the exclusion threshold will be raised to $2 million. On January 1, 2018, the estate tax will be completely eliminated. The agreement also excludes estate taxes for non-resident decedents who own New Jersey property. There are no changes currently to the inheritance tax. The agreement increases the New Jersey gross income tax, pension, and retirement income exclusions over the next 4 years for New Jersey taxpayers who are at least 62 years old and retired. Under the current law, retired taxpayers with $100,000 or less of annual income may claim a pension and retirement income exclusion of up to $20,000 for joint filers, $15,000 for individuals, and $10,000 for those who are married but filing separately. Over the course of 4 years, the exclusion will increase to $100,000 for joint filers, $75,000 for individuals, and $50,000 for married but filing separately. New Jersey's sale and use tax will decrease over the next 2 years. Starting January 1, 2017, the tax will decrease from 7% to 6.875%. On January 1, 2018, it will further decrease to 6.625%. Beginning in tax year 2016, eligible New Jersey veterans will receive an additional annual personal exemption of $3,000, and lower income residents will benefit from an increase in the New Jersey Earned Income Tax Credit. The current New Jersey Earned Income Tax Credit benefit is equal to 30% of the federal Earned Income Tax Credit. For taxable years beginning on and after January 1, 2016, that increases to 35%. The New Jersey Transportation Trust Fund, which was bankrupt as of June 2016, will be replenished by $2 billion a year through an increase in the gas tax. To accomplish this, the gas tax will increase by 23 cents starting on November 1st, bringing the total gas tax to 37.5 cents per gallon. The diesel tax will increase by 27 cents to a total of 44 cents per gallon. There's a provision in the bill which allows the state treasurer to adjust the gas tax annually if the target of $2 billion is not met or is exceeded. So the tax can increase or decrease each year depending upon revenues collected.
We hope you found the video informative. Ralph, the NJCPA was a very strong supporter of the TTF bill. Why was that?
Well, we supported the bill because our members indicated that they would support legislation like that. 2 years ago, we did, in conjunction with Franklin and Marshall, we did a survey out to a significant component of our membership to ask them about the Transportation Trust Fund and also to ask them about the estate tax. And this was before there was even, you know, a combination bill or, as we call it, a reform package. Our members indicated that they felt that the state's infrastructure needed to be improved, that we needed to have a solution for the Transportation Trust Fund, and that was absent having any discussion about the estate tax or things of that nature. Subsequently, we did another survey with Franklin and Marshall again, and we overwhelmingly, our members said a couple of things. One, they felt that the current estate tax situation here in New Jersey was the reason that many people left New Jersey. Obviously, there are other reasons as well. But I think the key thing that drove this reform package and helped lawmakers come together on this was the fact that 75% of our members indicated that they advised their clients as part of their wealth management or tax or estate planning that they should consider leaving the state of New Jersey because of the estate tax and also the inheritance tax. Those two taxes combined made New Jersey an outlier with respect to that legislation. New Jersey and Maryland were the only two states that had both, and so the tax rates associated with the estate tax put us over the top. So it was really onerous legislation that, so it made sense to support this bill because having a good infrastructure allows the state to grow because companies and also individuals will stay in a state where there's improvement in the infrastructure. And clearly New Jersey needed some improvement. I can't remember the statistics that were echoed about how many bridges were in disrepair and the problems associated with that and the average cost that New Jerseyans would spend each year repairing, getting front end alignments and blown tires and those things like that, so from pothole. But I also think clear to us, which really also helped us get over this hurdle on this particular package, was the work done by Senator Steve Oroho when he did an analysis of the Transportation Fund and the fact that if we did nothing, if we stayed status quo, it would cost New Jerseyans somewhere in the order of magnitude of about $50 billion over a 25 to 30 year period. And this was huge. So increasing the gas tax like it was done would bring money into the Transportation Trust Fund. But more importantly, that impact would not just be on New Jerseyans alone because of the individuals that travel up the Garden State Parkway and down the Parkway and up the Turnpike going through to New England and those folks from New England going to the South. About 30% of the increase is going to be borne by non-New Jerseyans. So, and we're still competitive with our border states, with Pennsylvania and New York in terms of their gas tax and their cost of fuel. So for all those reasons, it made sense for us to support this and be behind it. I think the other thing, and I'll roll into the ballot question that was on, a number of our members wondered why we were in favor of that, because we also heard from members as we were talking about this legislation, the concern that in previous years, the trust funds had been raided in their mind. Money had been taken from the funds and diverted to other areas that did not involve infrastructure. So by having a ballot question on November 8th, and suggesting that we vote and folks vote yes on that, it was to lock those funds up and make sure that they were truly used for infrastructure purposes, which was the intent of raising the gas tax. So, now, you say, what are people's feelings now? So let's transition. We thought it made a lot of sense to take a poll of our members to understand how they felt post the tax reform legislation once it was signed in. And interesting enough, 35% of the respondents said that eliminating the tax is an important first step in making New Jersey more affordable. And so if you go back to our previous survey where 81% of our members said this was something that they felt were causing people, that means that our members are going to have a different conversation now with their clients about their estate planning. 36% were unsure and feel there still may be unanswered questions in including whether or not the estate tax might be restored under new administration. Come 2018, we will have a new administration.
right.
Governor Christie will be termed out, so we will have a new governor. And all 120 seats are going to be up, so you may have some changes there. So I'm sure folks will be concerned when that new administration comes in, will they do something? And the only way they could do anything would be to introduce new legislation to roll back there. Our hope is that won't happen,
Right.
and certainly we're going to be on guard with that. And again, we will be surveying our members to get their pulse read so that we can provide critical information to the new administration if they should decide to try to make a change in that. Also, and I'll put this in there, 29% said that New Jersey's tax climate and cost of living still make relocation an option for many clients. So we've got a lot of work to do.
We do. Before we move on, and this is great, we are getting questions from the audience, and we have a question on this
Sure.
bill, Ralph. Has there been any discussion to eliminate the inheritance tax?
I think there has been discussion as one can, we didn't get in this situation overnight, so one of the things that we will be looking at is what are the next things that need to be done and how we work with lawmakers and the administration to put those next plans. If you recall, it's been about 5 or 6 years since we've had any significant tax reform, back to when single sales factor and things that impacted the CBT, the corporate business tax were enacted. Our hope is that we will look to have measures introduced periodically that would hope to reshape New Jersey so that, again, New Jersey would be more affordable. So inheritance tax is definitely on the screen, but I think we have to see how things play out.
Yeah.
We have to see where we end up from a budget standpoint. And again, there's not a silver bullet to doing this, so we're going to have to take measured steps to make sure we do the right things at the right time. But certainly inheritance tax is something that we're going to be looking at, along with some other items.
I would have to believe we'll be a player in that. They'll be asking us for our advice.
Our hope is that we were consulted on the tax reform package, so our hope is that we will continue, and we will need the input of our members
exactly.
to help us in this, to guide us as to what direction we need to take on these measures. So stay tuned for more little surveys. So please, when they come out to you, take the opportunity, and we ask our members to take the opportunity and share their views and thoughts about what's happening either with their clients or in the companies that they work for. So staying on the area of state tax update, we had a little hiccup, I would call it, when the governor decided to repeal the reciprocal agreement with Pennsylvania. Fortunately, they were able to find, and this was done because there was a perception that there was going to be a huge hole in the state budget, somewhere around $200 million. And by repealing the reciprocal agreement, New Jersey would benefit to the tune of $180 million. So it was a large number.
Sure.
Certainly there was a lot of concern raised by Pennsylvanians and companies in Pennsylvania who had individuals coming into New Jersey to work, because those individuals would probably end up paying more tax because they would be paying the New Jersey tax rate and Pennsylvania's tax rate. And I'm not a tax person, but I believe it's 3.07%. It's a flat tax. So, of course, that raised a lot of issues, a lot of concerns that the administration heard. So, lawmakers and the governor were able to work on another matter, which is estimated to save the state about $200 million, and that was the pharmaceutical plan that they revised that would save money in terms of pharmaceutical for the state workers. So the reciprocal agreement has been reinstated, but it still remains something that could be on the table down the road should the state run into some challenges from a fiscal standpoint. Continuing on the state side, 5 enterprise zones are targeted or scheduled to expire on December 31st. These were the 5 original towns or areas that were granted UEZ privileges, and they are Bridgeton, Camden, Newark, Plainfield, and Trenton. Work is being done now to try to extend them for another 2 years. I guess folks are on both sides, but the enterprise zone strategy was employed to help distressed areas enhance their economic development and bring revenue and also job creation in those areas. So from that standpoint, one would hope that these 5 enterprise zones would be extended and for the 2-year period.
But we'll keep our members up to date with
Absolutely.
Posting on the website should anything
Yes, happen on
transpire.
that. So stay tuned while you're going to be celebrating New Year's Eve. There may be something popping on these 2 matters. Hopefully that will get done before the end of the year in terms of that. The next area that I'd like to roll to is there's been a lot of concern and question about the use of driver's license numbers on tax returns and whether that's a mandatory requirement for New Jersey. And New Jersey does not require that, but apparently a number of the software providers require that information. So we've gotten a lot of questions about what do you do if, 1, an individual doesn't have a driver's license, and then 2, if they don't want their driver's license information disclosed. When here in New Jersey, the state requires electronic filing for all for tax practitioners doing, I believe it's over 10 tax returns. But don't quote me again, I'm not a tax person on that. But there is a mandatory requirement for electronic filing. It's our understanding that there may be a couple of solutions on that. You could enter zeros in the driver's license area, or contact your software provider to come up with a solution. I guess at the end of the day, and this would probably be the last option, is that you would do a manual return. And I believe there may be a waiver that may be available. But again, that's something that we're going to be researching with the Division of Taxation and make sure that our members are better in position to address this issue, because we have, as I say, gotten a lot of questions because it's been something that's been happening nationally.
There's a lot of discussion on the open forum on it.
Yeah,
so,
and also IRS and tax authorities think it's helpful to prevent fraud in that case by having that information.
Yeah.
And so that's one of the reasons that the software providers, I think, went to that, because providing that information, the service could match, or the Division of Taxation could match that information on that regard. So we've got a lot of things going on in that area. I think the last thing that we want to make our members aware of is that Pennsylvania is initiating a tax amnesty program, and that will be from April 21st through June 19th. If you recall, several years ago, New Jersey had tax amnesty programs, and it was very helpful for those individuals who had owed back taxes in terms of clearing and cleaning up those things. Pennsylvania has also had tax amnesty programs before, so we have information out on our website about the amnesty program, and I believe information to where you can call if you have questions regarding that. So.
Well, thank you, Ralph. That certainly is a lot going on in the state.
Oh, yes.
So continue to text us or Twitter us on Twitter. We're using our hashtag IssuesWatch. Any questions that you have, and we'll be happy to answer them as we go along. So we're going to move on to our federal tax update. And Walter, what do you hear? What's going on at your firm?
Oh, there's lots going on. And I'm sure a lot of our members have been reading and listening, and every day there's something different on federal tax update. But as everyone knows, tax season officially opens on the 23rd of January. It's another season, like all the other seasons we have in our professional life. But returns are due on April the 18th. April 15th is a Saturday. Emancipation Day is April 17th. Isn't that a Boston thing, Ellen?
No, Emancipation is D.C., I
DC?
believe. Patriots Day is
Patriots
also
Day, that's what it
also
is.
the
That's
7th.
right.
It's also that same Monday, but
There's also been a number of changes to filing deadlines for various returns, which was included in a bill signed by the President last July. Alert members to those. Please refer to those. There's information on the Society's website. And there's also been notable changes that got into effect for other returns, which are on your screen. You can peruse those. So this is really just a highlight of what our members really need to focus on and worry about for tax season. So W-2s, they're due at the end of January, as everyone probably knows, and then there's also applies to certain 1099 forms, miscellaneous for reporting non-employee comp, such as payments to independent contractors. So lots going on with the new tax season. And then we have President-elect Trump's tax plans. Every day I read something different about it. I think everyone has seen what's going on with, there's some really large proposals out there to really cut taxes across the board, and it'll have a major impact on what we pay as Americans. He's proposing to reduce the tax brackets from 7 to 3, which is on the chart that you see. There's many Americans that would pay less, and then there's some that are going to pay more. And it's all remains to be seen how much where all that falls out. He's also calling for the standard deduction to increase from $3,000 to $15,000 for singles, and from $12,600 to $30,000 for married joint. Also seeks to limit itemized deducts to $100,000 for singles and $200,000 for married joint. He would also eliminate the 3.8% tax on investment income, which is quite substantial. So the AMT would go away, which would be a good thing for a lot of us in the Northeast, because we all pay a lot of state and local taxes. It's always been my contention that's a very unfair treatment of us in the Northeast. So, and also head of household filing status would go away. The estate and gift taxes would end. There would also be a new deduction for child care related expenses, and the top tax rate for corps would be cut from 35 to 15. I also read the other day that this would also include S-corps and pass-through entities who pass business income to individual taxpayers. It would be a cap on that of 15% as well, and so there may be actually a tax that gets paid at the return level, and anything passed to owners will be considered dividends. So it remains to be seen where that all goes. So our firm has done some thought leadership on that topic. Regarding tax fraud and ID theft, the IRS is sending letters 5903 to certain e-service users to validate their identities. Those receiving the letters must respond in 30 days. Or their e-services account would be suspended. So that's something you have to really keep a watch out for those.
And to that point, Walter, we will obviously keep our members up to date on any tax fraud that we hear of, so that you'll be able to advise your clients. And at this time of the year too, you read a lot about fraud, not just tax fraud. Amazon had a something they put out. Apparently, someone was putting what looked like a true URL from Amazon, but it didn't have the S of the security, saying, click here to track your package. So what that did is that opened you up into your full Amazon account. So just be careful on anything. At this time we're all happily shopping online, trying to get everything ASAP, but be careful. Don't click on any link that you are unsure of. Across the board, whether it's tax or gift buying.
And again, on the fraud issue, IRS sends letters. They don't call. And so many of we've been hearing a lot about scams of that, where I'm an agent. You need to pay something immediately. You can either use write a check or a pay card or whatever. But so I hope our members will, but also for them to advise their clients. To be wary of those kinds of things that are taking place.
So important. So we're going to move on to our legislative regulatory outlook section of the agenda. So Walter, how about we start with you? I understand we have at least a temporary reprieve of the DOL overtime rule.
Yeah, a federal judge suspended the new Department of Labor overtime rule that was supposed to go into effect on December 1st. So the rule would have significantly raised the salary thresholds, which employees would have to be paid overtime. And right now, the future of that rule is uncertain, but employers should be prepared to implement, should they need to, in the new year. So interesting that that developed on a federal level. And also on
that point, though, there's a lot of work that's involved in that. I know
Tremendous.
A board that I sat on, they talked about having to review almost a third of the staff's the job descriptions and salaries. So it's not something that people should wait till the last minute, because there's a lot involved in that, as I see it.
Tremendous amount involved. Yep, absolutely, Ralph. And then on the federal single audit, I know that many of our members that practice in the government and nonprofit arena have been dealing with the uniform guidance, which was effective the end of 2015 for audits going forward. Also, just be aware the OMB will be conducting a study of federal single audits in 2018 and 19. And what could happen is audits performed in April of 17 could actually be scoped into those reviews. So members should really consult the ISCPA Government Audit Center, Quality Audit Center for those changes and be aware of those. And if you perform federal single audits, you really need to make sure that your firms and your practices are up to speed with that uniform guidance. So it's very important.
And on that, on that fact, we've gone out to our member firms to advise them to get prepared early for that. And in fact, I believe we have some programs that we're going to be running to assist them. I believe one is on December 20th here at Roseland, and it's the essential course for performing single audits. I would, for those that, who operate in that space, I would highly advise, because I think the last thing that we want to see is the kind of results that came out as from the employee benefit plan.
Department of Labor.
Yeah, the Department of Labor, the
yeah.
BLL. Yeah. That was not good for the profession, and when you have those situations, the tendency is for regulators to react and put more regulations, more fences around the area, that particular area. So we've got time now, and firms should be taking advantage. Another thing, firms that aren't in the AICPA Quality Audit Center may want to consider doing that, because when we look back at the results from the employee benefit plan audit, firms that were in the Audit Quality Center had a much, much lower non-compliance rate than those that were not. So good center provides a lot of information and resources on work in this area, in this space.
Absolutely. That's a good segue, Ralph, I think, into CPE standards. Certainly talking about the CPE that we currently are offering here and where it's going.
Yeah. Well, first and foremost, the state board is going to be doing another audit of CPE. It's going to be a random audit, so it's a little bit different from the audits that they performed previously. They're a little bit late because they're going to be looking at the triennial reporting period 2012 through 2014, the end of 2014. So the current statute says that you only have to retain your records for 5 years. So theoretically, CPE records from 2012, members might have been starting to dispose of them in January, beginning this January, since that would be 5 years. So we're suggesting that until the CPE audit is completed, that members hold on to their records and keep them in case they do get selected in the random audit. We were at the State Board of Accountancy meeting yesterday, and they talked about the audit, and that I think about 50% of those folks that are going to be audited, letters have gone out, and the remaining 50% will be hopefully go out by the end of the year. So, but in any event, we would suggest that members hold on to their records. We are going to encourage the board as they go forward to conduct the audits a little bit earlier, so that that won't impact our members in terms of their record retention policies on that matter. Of course, those individuals that take CPE with the society, that information is captured on the CPE tracker, and the state board accepts that. You could take a download of that tracker and present that, and that would suffice. Although we still remind licensees that they are responsible for maintaining their CPE letters and credit letters. But the tracker is something that the state board accepts at this time. It's also a good tool that you can use to record courses that are taken elsewhere.
Right.
Obviously, we'd like our members to take courses from us, but just in case they find a course that perhaps we don't offer, they can record that course in their tracker, and at least it'll help keep in one place a transcript.
Yeah.
And that's always the case when you get audited. You try to have to scramble and find your records. This will give you a central location for that information. Lot going on in this space in terms of the delivery methods of CPE. The recent standards that came out from NASBA and the AICPA on September 1st indicated a new learning platform, and that's nano learning and blended learning. These are two new instructional delivery methods, if you will. When we think about the technology today, the fact that you could see a video clip and in 10 minutes now you could get credit for that.
Nice.
However, in New Jersey, the New Jersey board has not yet adopted nano learning, so we will again advise our members and licensees when New Jersey, what their take is on this, because they're in the midst of reviewing the rules and regs that will be sunset in 2018, and they must be readopted hopefully by the first quarter or shortly thereafter in 2018. And our hope is that that new adoption will also include nano learning. And again, nano learning is where you see a video clip for 10 minutes and sometimes it may be 15, and you get 0.2 credits, if you will, for that. This is going to be interesting in how this all pans out over the landscape, because whether states will, how much of nano learning they will allow. Also, there's blended learning, and blended learning is where you have a portion that is kind of self-study. The licensee does something, then they go into a classroom environment. So stay tuned. There are going to be a lot of things coming out about changes, and particularly what's happening with New Jersey's regulations as well. And I would be remiss if I didn't mention the triennial reporting period.
Right.
The end of the current triennial reporting period is December 31st, 2017, and you must have 120 credit hours, at least 20 credits per year, and every licensee has to have a New Jersey law and ethics course. Now, I want to make sure that that licensees and our members understand this. 120 credits over the 3-year triennial reporting period. But if you have 120 after 2 years, you still must take 20 hours in that 3rd year. So I know a lot of people sometimes front-end load, and sometimes people back-end load. So
No.
the requirement, our members, they're time sensitive to that. So just remember that if you are audited, they will look to see if you have a minimum of 20 hours per year. So it's important that you do that. Particularly, a lot of our members try to get their CPE requirement out of the way early.
Right.
So, but if you have your 120 hours already, you still need to do 20 CPE credit hours in 2017.
Thank you, Ralph. That was great. We do have a viewer that asked that we put the tax due date slide back up. So we're going to do that as we transition to our focus on advocacy.
It's on the website too?
Yeah. It's on.
Yeah, and we also have that on the website as well,
Right.
in terms of the due date. So if we don't get it back up, we can certainly have that link and maybe provide a link post today's Issues Watch.
And before we go into advocacy, Ralph, we have another question, and it was, if it was up to you, would you have advocated for the termination of the reciprocal agreement with Pennsylvania?
Ooh, that's
Yeah.
a tough question. There are winners and losers on both sides of that. With regard to the reciprocal agreement, individuals in South Jersey would have been impacted to the extent that many of them may have paid more taxes. In terms of companies and individuals coming over from Pennsylvania to here, they certainly would have been impacted. They would have paid a higher tax rate. I think some of the things that I think were instrumental in having the reciprocal agreement reversed were the fact that companies who had planned to move to Camden and South Jersey were rethinking whether they should do that. I know one company in particular had already started building a new facility there, but they had a second facility, a conference center that they had not yet started, and they were revisiting whether they were going to build that facility if this reciprocal agreement had been lifted. I think the other thing that we had to take into consideration too is that companies where individuals worked in New Jersey, they may have moved many of those employees into telecommuting and working in Pennsylvania, and therefore we wouldn't have necessarily gotten the revenue that the estimated increase in revenue. So this is one of those tough situations where where we say winners and losers on both parts. Certainly, I think our former treasurer indicated, he spoke at our multi-state tax committee, said that he thought that the reciprocal agreement should have been lifted because, we used to have a reciprocal agreement with New York,
Right.
and that was
Right.
lifted some time ago. So individuals in North Jersey who go and work in the city end up paying, higher tax rates
Absolutely.
there.
That's a hard question.
Yeah.
And even, I think, Ralph, the major business groups, the Chamber, BIA, really didn't want to have to take a position on that,
Yeah.
if I recall, when that was a
Yeah.
hot topic. So I think,
And
we'll
certainly,
see where that goes. But I think it's definitely winners and
it's
losers
something that
tonight.
came up very quickly, and we had not had an opportunity to vet the issue with our members, so we did not take a position because, again, as I said, there are winners and losers on that. And I'm not sure if that answers the individual's
But
question.
I'm not sure that
but-
there is an answer
Yeah.
really, but, it was an interesting question.
No, it
posed
was.
out, so.
And again, it's something that may be on the table in the future. As the state, unwinds or moves forward, if we're not seeing the kind of growth that we hope that will happen, or in terms of also the outward
Completely.
migration, yeah.
All right, we're going to move on to advocacy, and Ralph, I'm going to ask you to kick that off.
Yes, it's been busy on the advocacy front. In fact, this morning when we came in, we learned some things. Last evening, the governor signed into legislation requiring that the state make quarterly pension payments. And many of you know that there's been a lot of discussion about the pension obligation and whether it was going to go to a constitutional ballot in this November, and since it didn't get on there, whether we go there next year. So hopefully this measure that was signed, and I must say it was signed, it was almost unanimous in both houses. I think there was one no vote on that. So that's I think important. What I think it does is it sets the stage that hopefully this wouldn't be on a ballot question for 2017.
There's strings attached to that, Ralph.
There are strings attached to
Star
it.
Ledger had an article about
Yeah,
this
there's an
morning,
article.
so,
It's really new. I think one of the strings is that is the state has to borrow money to fund the quarterly payment.
The pension fund has to reimburse the state.
pension has
so,
to, the fund has to reimburse it. So there's some things, some nuances there that we're just going to start to learn about. So, but I think this was a big issue the last couple years because the amount that was paid was not the amount that was in the 2011 legislation, which set out certain amounts. And the other thing that's new about this is the quarterly payments. Our revenue streams don't come in on an even basis. A lot comes in the third and fourth quarter as a result of taxes. Our third and fourth quarter of the state's fiscal year. So it's going to be interesting to see how the state is able to manage that. It'd be different if we had reserves. So a couple other things that are going to be on the radar screen, certainly beyond the pension amendment, are going to be minimum wage, paid sick leave. There's an anti-arbitration bill out there. Wage transparency, as a matter of fact, there are two bills up on Monday that touch on the gender equity and wage transparency. Certainly, we're always going to be on guard about the millionaire's tax because that's something that's been brought up. We actually had a millionaire's tax a number of years ago. It's been brought up on numerous occasions, as well as a sales tax on professional services.
Always out there.
So we'll be looking at all of these things. I think one of the things that we're going to be look to do this year is to possibly have the gubernatorial candidates come in and meet with society leadership in town hall meetings. So this will be a great opportunity for our members to share their views about what concerns them about all of these issues and even other issues that are out there.
Thanks, Ralph. We have several questions that are coming in. I'm not sure we can get to all of them. We'll do our best to answer them as we go along, and then we will do an extra session afterwards to address all
Our
the
Issues
questions.
Watch overtime, which
Yeah.
we'll do and send the information out later if we don't get to them.
Right. So as we move on right now, one of the things we did want to make our viewers aware of is that our Board of Trustees did approve a new strategic plan for the NJCPA on December 2nd. The plan is really designed to maximize our impact in core areas such as education, advocacy, member service, while stretching our thinking to ensure that the NJCPA attracts and engages the next generation of professionals. You know, Walter, you spent a year or so on this committee working. It's been I would say, a 2-year process putting this together. Can you take us a little bit through some of your thoughts on what you experienced and why the plan is developed in the way it is?
Yeah, I think the Strategic Planning Committee, which I sat on when I was president-elect, and now Ed Guttenplan sits on that, and we got together a collaboration of a lot of our members, leaders, firm leaders back in, what was that, September of 15, and that was really the core of it. And basically the committee, the Strategic Planning Committee reaffirmed the pillars that we've been kind of operating under for the last 7, 8, 9 years. And we came out with 4 really key initiatives we thought were really important for the future of our society. One is digital transformation, where we will update and further integrate our technology to better understand and serve our current and future members. Keep an eye out for a mobile app, NJCPA mobile app. I think that's in the cards somewhere down the road. Second was image evolution, where we leverage and capitalize on the firsthand expertise of our members to shape policy issues that are important to CPAs and their clients. Ralph just went through a host of things regarding advocacy, and that's really where all that ties in. Third would be future learning. You heard about nano learning and the changes that are going to be going on with CPE going forward. Our society will study and plan and retool our NJCPA products and services to make sure that they are responsive to what our members are looking for, and anticipate these changes in the landscape and remain a thought leader of learning and expertise for CPAs in New Jersey. So lots going on with that. Keeps Mr. Hardenberg very busy. And last would be Membership 2.0. We're going to evaluate and set the course to improve our value proposition and remain relevant and competitive with other societies and really be the society of choice for our members and be a resource for our members going forward. So I'm excited for the future of our leadership at the society to continue to evolve this plan and move it forward. So it's really an exciting time for us.
It is, and we'll have the plan also posted up on our website for those who want to read the full plan. One of the things we do pay attention to is the AICPA does a quarterly economic survey. And Walter, I'm going to ask if you take us through the latest one that they've done and what are they seeing?
Yeah, right now the latest survey among CFOs, controllers, and many members at of the AICPA, which we in practice are also members, for the next 12 months, there's a 38% increase in the last quarter of optimism, and it's the highest it's been since 2015. Some respondents specifically cited the election outcome, which I think many of us were surprised, but also were encouraged about the possibility of a reduced regulation, lower income taxes, and possibly repealing or changing the Affordable Care Act, because that's been a real onerous requirement on business. Healthcare costs are continue to be a major factor. And then here in New Jersey, business owners participating in the NJBIA annual economic survey said they expect hiring to increase, sales and profits to rise in 2017, but they still report concern about the overall economic future of our state. I think in the last Issues Watch, I referenced our members should keep an eye out on what's going on financially with our state. I participated on the panel last Friday at BIA. It was a very interesting and dynamic format. I sat on the economic panel. We heard from legislators. I think the concern of business owners and business leaders in the state continues to be the incurrence of debt, especially with our pension and health benefit obligations to our retiree health plans for state workers. So I think that's something that we have to pay attention to. And I think BIA and the other business organizations are going to look to us to help give input and come up with some, hopefully, solutions to where the state can go with those.
Thank you, Walter. So, Ralph, the AICPA and SEMA joint venture, which was certainly approved by the AICPA membership, where are they now?
Well, 2017 is going to be a big year because it's going to be a launch of the enhanced joint venture relationship. It's going to result in the two organizations having to realign their year ends, and so there's going to be some about a 2-year period through 2019 that's going to take place. Many people have asked about what's the governance structure going to look like. Each group will have its own board, and then the two boards will come together to form a joint board for what is referred to as the association. And again, this joint venture is to try to help ensure that the CPA designation is one of the 2 or 3 designations that's held on a global basis. So I think the combination of working with SEMA presents a great opportunity for us, particularly to bring in CPAs and folks in industry in alignment with what we do in the CPA profession. And I think it'll be a good combination. I know a lot of people are concerned about it, but I think going forward the landscape is changing, and this is something we need to change with as well.
Thanks, Ralph. A couple of questions. I'm going to bounce back and forth
Sure.
here just a little bit, and these are probably, really more for Ralph. How will the state report back successes as a result of tax reform? It will take time, but the state should be prepared to make some noise and overcome skepticism.
Yeah, and I think that's one of the things, and Walter mentioned it about our members playing a key role. Certainly we want to hold the state accountable in terms of the tax reform package. We're going to be asking questions, meeting with key people in the administration to see where exactly we stand. And I think it's going to be incumbent upon us to make sure that we continue to do surveys with our members to get their reaction about what is taking place, because I think information is critical in terms of setting public policy, and that's how we want to participate in this thing. So I think we're going to try to take a more active role in understanding how the state is doing and raise questions about that. Something interesting, just real quickly, and I know we're coming towards the end, there was a piece of legislation that was approved by the Senate Community and Urban Affairs Committee about sharing, what they call
Shared services.
Shared services. Good. Thanks, Walter. Yeah, and that's something that people have asked a question about all the time. Why is it that we can't share services? So I think things like that, where we can play a real role in that. And I think, too, we're going to be trying to push our members to get involved on the municipal level, because I think they can bring some real critical business acumen to the school budgets and things of that nature. So I think that's how I think we're going to try to make sure we understand.
Ralph, members have to dig in.
Yeah.
I mean, we're all here to stay. We'd love to retire here if that's in our plans. And I think we bring independence and objectivity and unbiased opinions and research, and that's where our members can play an important role in where our state goes.
Yeah,
Because,
well, Walter, well said.
We're not out of the woods, believe me.
And I think the critical thing is we have to make sure we're there before the train leaves the station, because once it leaves the station, it's too tough to stop. It's too tough to redirect it and stop it.
Okay, we wanted to make you aware, we're really excited to announce that the current chair of the AICPA, Kimberly Ellison-Taylor, will be joining me for a live Issues Watch broadcast on January 12th. It will be in the noontime hour. Also, our guest will be President-elect nominee Sarah Crom. So the three of us will be here. Will be all women, so that'll be new and exciting. But we're hoping that you'll join us. There's a link on your screen to register for this free webcast, and we will be sending out emails, obviously, reminders how to do that. Well, Ralph, I'm going to turn over to you for a couple reminders.
Yeah, a couple of key dates that we want to make sure that our members are aware of. Obviously, for those that do tax work, you must renew your P-10s by December 31st. For members or those individuals that are going to be taking the CPA exam, it is changing April 1st. So if you haven't done a schedule to notice, do that quickly before some of the changes take place. And then certainly for those individuals that do audit or attestation work or that are registered as a firm here in New Jersey, if you are not doing any services that will require peer review, you must file a peer review exemption form by June 30th. That form is due on June 30th. Otherwise, you have to you're subject to peer review.
Thank you, Ralph. The slide on your screen now highlights some key media coverage for the NJCPA and its members over the past couple of months, including an article in the Wall Street Journal and a segment on NJTV. That was pretty exciting. That concludes today's broadcast. We'd like to thank you for tuning in, and please join us again, as I mentioned, our Issues Watch on January 12th and on June 23rd, where our new install President Ed Guttenplan will be our guest. In the meantime, check njcpa.org, NJCPA Pulse, and the open forum for updates on all the topics we discussed today and more. And remember to follow each of us on Twitter. We close today's broadcast with a very special holidays video from our staff to you via the Mannequin Challenge. Happy holidays.
Happy holidays. Happy holidays from the NJCPA.